rally, I will be surprised that if markets make a new high. Deven Choksey, will you be surprised if markets make a new high in this leg of rally?
Good morning. Well, I think the fabric is woven as far as I think the market direction is concerned. Though the yesterday's rise has been significantly, I think, large, as I would like to call it as, and money market would take some time to pull off and adjust to this particular rise. But going forward, the direction remains clear. We probably would see the higher contribution into the index stocks, particularly from the index stocks into the indices, and that would include some of the heavyweights in IT space per se, where I believe that I think would probably I think start giving the little higher amount of push as against I think the earlier push of only BFSI and Reliance to a greater extent in last few weeks. So I guess I think if the IT stock starts supporting the index, then possibility of 25,200 on Nifty in the following times I think is distinctly there. And should we cross above what 25,200 and stay in that particular region between 24,200 to 25,200 by Nifty, maybe I think one would see that the market consolidating, and by the second half, I think would take initiative to go a little further up. But at this point of time, direction remains positive. Maybe some amount of correction in the indices is definitely due because the sharp rise has happened yesterday. And that correction could possibly be a good opportunity for investors to buy into the market.
Deven, what would you recommend buying afresh right now, given how the earnings have panned out? And let's keep all the geopolitics, all that's happening on the world aside, but just purely in terms of earnings visibility and the valuation that the stocks are available at, what's looking good to go?
So when the momentum is back, I think the market is crazy about the mid caps and small caps. I think I would like to stay a little bit more protective at this point of time as far as the portfolio construction is concerned, and would probably continue to stay with some of the larger companies. Maybe I think the couple of sectors where the immediate rise, including the momentum, may support. One of them would be IT, second could be pharma, and third could be metals. I think they could possibly, I think, give the momentum-based push as well. I think into the Nifty 50 stocks. But over and above that, I think we continue to hold our positions in some of the good quality BFSI companies where we believe that I think higher amount of growth is going to drive the profit performance of these companies systematically. Within the manufacturing space, I think we remain distinctly clear on two, three aspects. On one side, the input cost is remaining under control, unlike the last year. And on the other side, the demand scenario, the business conditions, I think, are improving, particularly for capital goods segment as a whole. So we remain distinctly positive on that front as well. Yes, but the approach should be selective, very, very selective in the mid-cap space, where we like some of the companies, but I think if the valuations are expensive, probably we would decide before buying into them. That's the approach that we have taken in our portfolios investments.
So which is one stock you want to buy, but you would buy 10% lower? And which is one stock you're buying right now because you think that another 10-15% is coming in next 6 months?
Yeah, it's a good point, Nikunj. I don't know immediately the answer to that one stock. I think we should be 10% more. But certainly, I think as I was making a point that some of the IT and pharma companies remain, I think, relatively more appealing today because of the trade deal which has been signed with China as well. So more certainty has come on that front. Not too sure whether I think I would buy a 10% more into some of the IT pharma. They are currently available at corrected price. So to an extent, I think I would consider buying into the portfolio now and not wait for later.
Okay, I'm just looking at the gainers and the losers here. And Kunal, so let's say the uptrend continues. So the leader of this uptrend is banks. The leader of this market, Reliance, what we were just discussing. In this leg of uptick, which let's say started last week, and it just got more powered up yesterday. Will the leadership change? Could new set of leaders emerge now? Now that Reliance has moved up, banks have moved up.
This could be interesting, Nikunj, because so ideally it should not happen. Ideally, the leaders, they continue to charge up. They continue to move up higher, because we've seen actually that the mixture of the banking stocks and the larger cap names has still not been very, very broad based. We're still specifically looking out for strength in ICICI Bank, strength in HDFC Bank, and then maybe Kotak Bank, even though it has a lower weightage on the overall index. But I think that's where the markets are getting into right now specifically. You need to see strength across the second rung performers, because you've still not seen any major strength coming out on the PSU banking front. The tier 2 private sector banking stocks, they've not performed except for Reliance. Many of the other stocks have not performed. Bharti Airtel, of course, has been a strong performer, but then I think what we're looking out for is very segregated kind of moves from large cap names. The best part is that these stocks have been seeing very good volume patterns, and when you see stocks, large cap stocks, they come out of 3 or 5 years of consolidation or underperformance with respect to the peers. The outperformance lasts for many quarters to come by, and right now we've just seen maybe 3 months of 2 months of outperformance for many individual stocks. So if you ask me for the next 6 months, 9 months, there could be a very strong indication that these large cap names, they could keep on performing better, but maybe from a next couple of week perspective, there could be a chance that these stocks might underperform.
Okay, that's what the leadership texture on the Nifty is going to look like. But given that US-China trade deal could actually, last longer than 90 days perhaps, the fact that US has agreed to lower Chinese import tariffs to 30% for the next 90 days, in the meanwhile which they're going to try and reach a final negotiation, and that's going to continue on what happens beyond this 90-day period. Let's see what actually could be a tactical play. And Deven, you think that shipping, air cargo, containers, that could be the go-to space? Because a lot of it was, sort of lying in no man's land, and trade had really sort of come to a stall between the two countries.
Yeah, on the business condition side, yes, I think it definitely favors these particular businesses. Not too sure about the valuation of the companies which you mentioned as a sector. So probably I think not very comfortable immediately putting in any names before for buying or selling at this point of time, but would like to study more on the valuation first, I think, for some of these sectors, and then take a call on it. As of now, as I said earlier before, I think we are more comfortable with the decided space in some of the large cap companies, within IT, within pharma, and in select metals as well, apart from, I think, the BFSI companies.
Okay, Tata Motors and that's going to be in focus. That's all set to report its numbers. In fact, the auto major is expected to report weak numbers with margins under pressure. Shrishti is here to tell us what the street is expecting this time from Tata Motors.
Well, yes, when it comes to Tata Motors, the key to watch will be the JLR EBIT margin as well as the commentary on that particular front, because for now, in the quarter gone by, when we look at the volumes, the India business did not perform that very well because there was a decline in terms of the PV as well as CV volumes on a YY basis. But when it comes to JLR volumes, and there was though an uptick of 3% on a YY basis that is expected. Talking about the numbers, the revenue is expected at 1,23,158 crores. That will be a jump of 3% on a YY basis. The realization is expected to see a bit of a jump up, while the EBITDA is expected at 16,331 crores. The margins too are expected to take a bit of a backseat, or rather a mild hit, and almost 90 basis point of decline is what we are anticipating on a YY basis, and 13.3% is what we are expecting on the consolidated margin front because of the additional spends that, especially for the JLR division, that happened in the quarter gone by. And lastly, on the profit figure, 7,669 crores is our expectation. One should not read into the significant decline on a YY basis. Why so? Because there was a deferred tax adjustment back in Q4 of FY24. But well, of course, apart from the numbers, the JLR EBIT margin is expected at 10.7%. So that will be the key monitorable. The commentary with respect to what's been happening related to tariff and the demand outlook will be certainly the key focus area. And lastly, and the demand areas and the outlook for the domestic market will be the key to track for Tata Motors. So all eyes on that. Back to you.
Rudramurthy, what's your view on Tata Motor? It came cracking down from what, 1300 all the... Not there. Deven, what is your view on Tata Motors, given that it is now in that space where I can argue both ways? The purist would say the EV space is getting too competitive. The innovators would say EV is the future. Where does Tata Motor fit in now that we've got clarity at least on the JLR business?
So I think the JLR on one side, the passenger vehicle domestic portfolio on the other side, and the commercial vehicle portfolio along with. I think each of these three portfolios, they remain, I think, very sharp, pure focus portfolios for company as a whole. In each of them, probably, I think, whatever the worst had to happen has already happened, I believe so. The demand conditions are remaining relatively better, and at the same time, I think the cost of manufacturing, protecting the margin, is promising to be on a higher side. Maybe the fourth quarter could see one of the weakest earnings. I think that one would probably, I think, argue for. But that remains the fact that I think the subsequently in the current financial year, including for JLR, I believe that I think the things should look up globally. In my viewpoint, I think we remain cautiously optimistic about the prospects going forward for Tata Motors. And having seen the price correction, this could become probably an opportunity also, at least in the near term, to buy into the portfolio.
But Deven, let's talk about some of the underperforming pockets, right? We've seen metals be a little wobbly. IT, of course, has not gone anywhere since January, I think, and has been one of the biggest underperforming sectors. Any bottom-up stories that you think are going to come out stronger now that there seems to be some resolution inside between China and US?
So we remain positive about the prospects moving forward for the metal as a commodity. The ferrous and non-ferrous both included in this case. And in situation where I think the likes of Hindustan Copper, or for that matter even Sterlite Copper or Inalco, I would think that I think the copper business per se remains, I think, absolutely very appealing and positive. The growth going forward would be seen larger coming from this particular metal per se in the commodity space. So we remain relatively more confident about the prospects going forward for metal companies in the given situation. Now that I think the most of the trade situation is possibly working in a direction of coming to some kind of an agreement globally, we would like to think that the higher amount of capex spending, which was up till now pending from the global companies, including from US, would start happening now. And that's where once again I think the commodity would probably start picking up. So we remain with a 6 month forward outlook positive on the prospects of metal commodity. We also remain a little more positive about the IT companies per se. Believe that I think the valuations are comfortable currently, and at the same time, I think given the kind of clarity in environment, some of the IT companies would probably start looking up from the investment perspective as well. I think they will look up apart from earning prospects. So I would think that I think some of these particular areas would remain relatively more positive going forward.
All right, so let's watch out for that. But with Deven, we let you go on that note. Thank you so much for taking the time out and speaking with us this morning.